Hey folks, it's Vic Noble here with another weekly trading example for you for the week ending August the 22nd of 2008. Actually, it's more of a trading lesson than an example. So I want to talk to you about knowing when to expect a move to be completed. Like we had this big drop in the euro US dollar here over the last few weeks, and how do you know when it's okay to start looking for the possibility of a going long again, of buying again? Because in this area here, if you look at these weekly candles, or pardon me, daily candles, they're going straight down. Okay, how do we know when we should expect there to be a stop to this and maybe look to start going long? Well, we want to look for the same old thing that I preach over and over, and it's support and resistance. You have to understand where these levels are at and where price is expected. You can expect price to have a reaction. Now, in this case, one of the very useful thing to watch is always looking at old support and resistance levels from the past. So this area right here, this whole 149 area right here, very important area to watch, because see all the resistance here, and this is all from last year and earlier this year. This becomes a very important point to watch. Do you start buying when it hits here? Absolutely not. Make sure that price has bottomed out and you get evidence of that. And I'll show you what I mean by that. There's an old expression in trading: don't catch falling daggers. Okay, you'll get hurt doing that. Let them stop dropping and pick them up very carefully. So as price continues down, and we see this little, look at this little rejection and a positive close for the first time in a long time, we can now start to look at the lower time frames. You go down, just hang on a second here. If we go down and look at the 4-hour and 1-hour charts now, see, we want to start to see, we can see that here's that little spike that we saw on the daily chart, and price starts to rally a bit. So what do we got happening on the hourly chart? Well, if you go down to the hourly chart, here's the drop. Look, it looks like we have some positive divergence happening here. You see the price is going down, the MACD is heading up, so that's positive divergence. But the problem with this divergence for me is that this is not much of a rally. In fact, this is more like a bit of a head fake, and you've got to be very patient. If you have to wait 2 or 3 days, wait. Don't get antsy to start getting into things that you shouldn't. And all that happened in here is what? Well, we went into some consolidation, right? Look at this. From these highs down to these lows, basically we had this big choppy range going on in here. How do you know what's going to happen in here at this point? You don't really know what's going to happen. So you can trade this on a very short-term basis, scalping and so on in here, but be very careful of getting any kind of a longer day trading position or longer. Not yet. Look at this range. See how it stayed in here for a long time? This is actually what this is what? MACD neutralization. MACD just comes back. This is not really good positive divergence, pardon me, at this point. That's not confirmed. And what happens? Look at this. It starts to head back down again. See? On the 14th, down. And if you go back to the daily chart now, what's happening? Look at the candles. They started to falter in here. And finally, look at this move. Look at the sharp move down it made. I'll just zoom this in a little bit. And you can see it makes an inside candle. That's a clue that maybe we're going to stop going down. We don't know for sure. And then, now that's a little bit better. We have a spike down and a kind of a quasi hammer. So that was on the 19th. If we go back to our hourly chart again, what's happening on the 19th? Let's move it ahead. Okay, this is what's happening. We get that drop down there and it starts to rally. See? And we've got what? More negative divergence, or positive divergence, pardon me. Price is going down, MACD is going up. Now this is stronger. Look at the move off of this bottom compared to this choppy stuff here. Much better. And I teach this in the Coach's Corner sessions, how we trade MACD divergence like this and what to look for specifically. But now this is setting up the possibility of a head and shoulders bottom. Okay. Now, if we do get a head and shoulders bottom and we are going to go up, where might we expect there to be resistance? That you always have to think this. Where's support? Where's resistance? So let's move our 4-hour chart along here. And you can see here's this choppy channel that we saw on the 1-hour chart. Move it along. Now, look at this. can you see that this level right here around, I don't know, 149 or so is going to be a level of resistance possibly when it gets up to here, right? You want to be very, very careful. Watch out for this, because if you start to get long back in here, you've got that way you know how much potential you have in this trade. And if you go back to our hourly chart and we move it along, this is the kind of situation where you want to look to buy dips now, because we have a potential head, left shoulder, maybe a right shoulder coming in here, and through various techniques we can show you that that's how you want to get into these trades and ride them up. Remember, we said look out for 149. That was on the higher time frame 4-hour chart. Okay, very obvious level. We had some people in the coaches corner take some nice trades up in that area. So and so that's kind of what our potential is. So if you're getting in around this area down in here, which is what you should be doing, you're going to have a nice, a couple hundred pip profit potential. And be very, very careful though when it gets up to that 149 area. See? And let's just have a look and see what happened. Here's 149. This is coming into today, which is the 22nd. You see how we hit 149 here? Remember we said on the 4-hour chart, watch out for that 149. Let's bring it along here. There we are, 149. Now what? Well, now, I tell you what, you go down to your smaller time frames and see what's going on down here, and let's go do that. So let's go look at a 15-minute chart. Here's the 149. Okay, that was on the 21st. And what do you see here? Well, we hit 149, but look what's going on here. This is one of the best ways you can use MACD, is just to watch for divergence. See the price is going higher, the MACD is going lower. That's negative. And this is not a bad setup in here for looking for the possibility of a sell, because we know that this is resistance based on the higher time frames, right? And there again, I show you specifically how to do this, but it's sets up a really nice selling opportunity. And this is just all simply by watching the higher time frames and zeroing in down on the smaller time frames to figure out what to do. Right? You got to know this stuff. This is why it's so terribly important that you always, always, always watch what's going on the higher time frames. That 149 level, right? That became a pretty decent level to watch for so far. Here's so far today. You can see the reaction off of it. So knowing all of these levels, putting them together with pivots, putting them together with Fibonacci's, all that kind of thing will really, really enhance your trading. I've seen some fantastic turnarounds in people's trading and moving ahead. It's just wonderful, and I thoroughly enjoy doing that. So, if I can help you, please don't hesitate to get in contact with me. And anyway, you guys have a great weekend, and I'll look forward to putting out another example / lesson or whatever next Friday. Have a good weekend.